Hey everyone, welcome back to the channel. If you're new here, make sure you subscribe and turn on notifications because we're constantly breaking down some of the most explosive opportunities in the penny stock space that most retail investors completely overlook. Today we're diving deep into 5 exceptional penny stocks trading under $1 that could potentially deliver extraordinary returns if these companies execute on their strategic initiatives and market conditions align favorably. Before we proceed, I need to be absolutely clear. This is purely educational content meant to inform your own research and thinking. This is not financial advice whatsoever. This is not a recommendation to buy or sell any security. Always conduct your own thorough due diligence and consult with a qualified financial advisor before making any investment decisions. Penny stocks trading under $1 are inherently speculative and extremely volatile, so only allocate capital you can genuinely afford to lose completely. That said, if you stick with me through this analysis, I'm going to break down exactly why these 5 companies are trading at sub-dollar levels, what makes each genuinely interesting from a fundamental perspective, and how disciplined investors can think about approaching the sub-$1 penny stock space. The penny stock space under $1 is absolutely fascinating because it's where genuine inefficiencies and explosive opportunities exist. These aren't speculative shell companies or outright frauds. These are real companies with real operations, real revenue, real customers, and legitimate business models that have been beaten down in valuation for various reasons, including sector rotation, temporary operational challenges, market sentiment shifts, or simply being too small for institutional attention. When you can find a company with real assets, real business operations, and genuine growth potential trading under $1, you're potentially looking at an asymmetric opportunity where upside could be 300, 500, or even 1,000% if execution goes well. The challenge is that most sub-dollar stocks fail. Volatility is extreme, liquidity is thin, but for traders with proper risk management, position sizing discipline, and the ability to hold through volatility, the potential rewards can be extraordinary. Let me walk you through 5 specific opportunities currently trading under $1 with different industry exposures, risk profiles, and fundamental stories. The first opportunity is a cryptocurrency mining equipment manufacturer based in China that manufactures Bitcoin mining machines and AI-powered computing equipment. The company reported recently that they received a $72 million investment from prominent firms, including Galaxy Digital, Brevin Howard, and BH Digital, demonstrating significant institutional confidence. The company has achieved analyst price target upgrades with Benchmark and B. Riley, both setting targets around $3 to $4, representing 300 to 400% upside from current levels. The company reported absolute record quarterly free cash flow generation with revenue surging over 100% year over year. They're expanding North American manufacturing operations and developing next-generation mining hardware. However, investors should understand that the company is highly leveraged to Bitcoin price movements and cryptocurrency market cycles. The thesis is that if Bitcoin prices remain elevated and the company maintains manufacturing scale, the stock could appreciate dramatically. The second opportunity is a private aviation company providing membership-based access to private jets and aircraft management services. The company recently regained NYSE compliance after a period below minimum listing standards, demonstrating recovery momentum. The company has partnerships with Delta Airlines and is launching new membership tiers that offer guaranteed nationwide access to modernized aircraft. The company reported revenue of $792 million in fiscal 2024, which represents massive scale. However, the company is currently unprofitable with substantial negative EBITDA and significant cash burn. They face competition from larger aviation companies and are dependent on wealthy consumers' discretionary spending. The thesis is that if the company successfully achieves profitability through fleet modernization and cost reduction initiatives, valuation could see dramatic re-rating from current depressed levels. The third opportunity is a Canadian gold mining company operating the Buckreef Gold Project in Tanzania. The company reported record quarterly production with gold output increasing substantially. Analyst price targets suggest upside to $1.25, representing meaningful appreciation from current levels around 87 cents. The company is trading at incredibly attractive valuation metrics with strong free cash flow generation. Most impressively, H.C. Wainwright maintains a buy rating with a price target well above current trading levels. The company is expanding its processing plant and upgrading operations to significantly reduce per-ton operating costs. The gold industry remains a secular beneficiary of geopolitical uncertainty and central bank demand. However, mining companies face commodity price cyclicality, operational risks, and regulatory challenges. The thesis is that record gold prices and operational improvements could drive meaningful re-rating. The fourth opportunity is a fintech company specializing in digital asset management, cryptocurrency trading, and decentralized finance solutions. The company reported revenue of $22.5 million in recent quarters with strong growth acceleration. The company recently announced expansion into Brazil with Brazilian depositary receipt listings on B3 Exchange, opening massive new markets. The company operates Vala, which manages digital assets with nearly $1 billion in assets under management. However, the company faces significant operational losses and negative free cash flow despite strong revenue growth. The company operates in an emerging, volatile, and evolving regulatory environment. The thesis is that if the company achieves profitability, successfully expands internationally, and benefits from cryptocurrency market growth, explosive upside could result. The fifth opportunity is a healthcare company providing value-based care solutions for senior populations through primary care physician networks and capitated risk-bearing entities. The company serves Medicare Advantage and Medicare fee-for-service patients across multiple states. The company received analyst price targets around $1.50, suggesting upside from current levels. However, the company faced significant challenges recently with analyst downgrades from Barclays and Bernstein. The company is currently unprofitable and faces challenges with contract economics and medical cost management. The company received a non-compliance notification from NYSE regarding minimum price requirements. The healthcare sector is attractive, but the company faces operational headwinds. The thesis is that if the company successfully improves operational metrics and achieves profitability, valuation could re-rate higher. Now let me establish a practical framework for evaluating penny stocks under $1. First, understand that position sizing is absolutely critical for survival in this space. Never allocate more than 1% of your portfolio to any single sub-dollar stock. The entire sub-dollar allocation should not exceed 3 to 5% of your total portfolio. This mathematical discipline ensures that even if multiple picks fail, you survive and potentially profit from the winners. Second, focus on companies with legitimate revenue generation and tangible assets or intellectual property. Look for evidence of actual business operations, not just speculative positioning. Third, analyze management quality and insider ownership. Are insiders buying or selling? Do they demonstrate conviction? Fourth, understand the specific risks and catalysts for each company. What could go right? What could go wrong? Fifth, have predetermined exit rules. Know your pain threshold and profit targets before you buy. The macro environment for penny stocks under $1 is mixed but offers opportunities in specific theses. Cryptocurrency markets remain volatile, but institutional adoption continues. Gold prices remain elevated due to geopolitical uncertainty and central bank demand. Healthcare transformation continues with value-based care expansion. Private aviation markets show resilience despite economic uncertainty. Fintech disruption continues accelerating globally. Understanding how each macro theme supports your thesis is critical. Here's what I want to emphasize before wrapping up. Penny stocks under $1 contain both genuine opportunities and catastrophic risks. The 5 companies discussed today represent different industry exposures and growth narratives. A cryptocurrency mining equipment manufacturer positioned to benefit from Bitcoin bull markets, a private aviation company executing a turnaround, a gold miner producing in a strong market, a fintech company expanding globally, and a healthcare provider transforming care delivery all represent different paths to potential value creation. If you're going to participate in the sub-$1 space, educate yourself thoroughly, understand the specific business models and challenges, analyze financial trajectory carefully, position size appropriately, and be prepared for extreme volatility. Penny stock investing under $1 is speculative but not necessarily reckless if you manage risk appropriately. I really appreciate you investing your time in this analysis with me. If you found this helpful and want to see more content breaking down opportunities in the penny stock space, please like this video and subscribe to the channel. Drop a comment and let me know which of these 5 stocks under $1 interests you most. Do you believe in the Bitcoin mining thesis? Are you bullish on private aviation recovery? Do you think gold mining represents value? Are you excited about fintech and cryptocurrency growth? Do you see healthcare transformation as compelling? Your thoughts help me understand what analysis resonates. And remember, this is educational content meant to inform your own research, not a recommendation to buy or sell, not financial advice. Always conduct your own research and consult with a financial professional before deploying capital. Thanks so much for watching, and I'll see you in the next one.